Hi, Robin here, and welcome to this real quick market update. So instead of just sending you guys the report once a week, I will do a quick walkthrough across our performance, the things that we have been up to, also a bit of like analysis of all the things that happened in the macro economy. Obviously, I'm not a macro expert, I'm more a crypto expert, but we will still cover that. We will walk over all the positions that we have closed in this period. Also, you will get some insights into our current positioning. I can't obviously share the positions that we are currently actively holding besides Bitcoin, because this is a position that we disclosed for quite some time already. So yeah, without further ado, let's directly dive into it. So first, let's go over our current performance. So since the 1st of May, we are sitting at a nice profit of 6.3%. We are currently up 1.1% versus Bitcoin and 6.1% up versus Ethereum. Our max drawdown throughout this period was 4.7%. So let's quickly walk over the things that we have been up to, or that explain a bit about our reasoning and our positioning throughout this period. So first of all, we are looking at the period of the 4th of May till the 11th of May. Actually, I showed the performance from the 1st of May, but it doesn't really matter too much. So as we all know, geopolitical tensions are still a big thing. And also, like, I think not a day passes where you don't hear about the Middle East conflict, about Trump, about like some political instability, either in the Middle East or also in Russia or Ukraine, even if we had some or ceasefire. I think it's currently there's a ceasefire. So a lot of things are still going on. And yeah, this was also the thinking, or like that explained a bit our positioning, especially at the start of this period. So we went into this period with around 70% of our portfolio allocated to Bitcoin and 30% allocated to USDC. Now, a lot of people, this is something that I see happening right now a lot. A lot of people are still waiting for like more confirmation when it comes to like entering a position, which in my opinion is not necessarily the best. Right now, the times are so uncertain, and like if you don't have a system right now, it's really, really hard to navigate those times. And usually like the periods where the market starts to bottom out, in my opinion, are always like the times where you have a lot of fear, where you have a lot of things that are uncertain. And right now, when I look into the news, like all you see are negative news. And for me personally, this like I will not predict the future, but usually this is like a pretty good time to start being invested in the market. Obviously, no, that's not financial advice, but out of my opinion, it looks quite bullish. I wasn't that bullish for quite some time. I see a lot of people being negative, and usually this again is a pretty decent time to start paying attention. So yeah, oil and the geopolitical tensions were one of the core reasons why we didn't introduce more risk to our portfolios. Simply because, yeah, obviously, like there's still like one bad tweet from Trump can lead to prices going down quite a lot. But we also saw that crypto reacted less and less aggressive to negative news, which is also a quite positive sign. On top of that, we have a lot of liquidity entering the markets right now, not crypto specifically, but overall liquidity that is being pushed into the markets by the Federal Reserve. Maybe not through the main channels, but definitely there is some liquidity entering the system. And some other interesting stuff that is going on in the macro market right now, which makes me believe that there is like light at the end of the tunnel. Let's put it like that. All right. So yeah, uncertainties around the Strait of Hormuz continue. Also, the energy crisis is getting more and more risky. So this is definitely one thing that we heavily monitor. So yeah, oil prices are still elevated, to say the least. and it is not over yet. So we have to be very careful when it comes to introducing even more risk to our portfolios, even if our portfolio right now is quite risky for the time being. Now, commodities, especially like oil, are looking pretty decent, or are looking like they want to rip higher. But also on the other hand, we have the stock market not making all-time highs, but made all-time highs yesterday actually. Then on top of that, also the IWM made all-time highs just a couple of days ago. Now we see a little correction, which in my opinion is still healthy and was expected. Now, when we head over to crypto, we also saw that Bitcoin was on a very strong upward movement over the past couple of days and slash weeks. And this is usually something that makes me quite bullish, because the longer Bitcoin is in an uptrend, the higher the chances are that we are going to continue to stay in this uptrend and to continue to see positive momentum over the next couple of days. So overall, I'm quite bullish. Also, we are above some of the moving averages. When we just look at the 50 SMA, we are way above the 50 SMA, and also we are touching the 200 daily simple moving average. This is usually a pretty good sign if we cross the 200 daily simple moving average. This was usually also a period where you could enter with more conviction, because this was usually a clear sign for a regime shift. Now, when we crossed the 50 daily simple moving average, this was also a pretty decent sign, but the probability of a regime switch is quite high once we cross the 200 daily simple moving average. Now, again, is this the certain end of the bear market? I'm not 100% sure yet. For me personally, I think it is a good time to be invested if you have a system, and also, like, most people are quite emotional right now. Like, I always imagine the market like people running around with no hats and simply listening like to all different types of sources. No matter where you look, no matter what news outlet you're currently looking at, all people are extremely bearish. And usually when everyone has the same opinion, it is very hard for me to be bearish under those circumstances. And no matter where I look, like, people are bearish. So I often like hear the question of, okay, like, who buys right now? Like, who's going to lead who's going to be the source which leads to higher prices? And to be honest, I feel like when nobody is invested, and we see like just like a little start of an upward trend, and let's say we continue this upward trend, the question who will be invested or who will be the source of a further upward movement is quite simple, because all the people are sidelined right now. And for me, it's quite obvious who's going to buy. Like, all the people who are currently saying it's too early to buy, because a lot of them will FOMO back in. And I think that is a normal part of the cycle. It's hard to be bullish in times like this, but this is our edge. This is how we invest. We invest based on a system, not based on what our emotions are saying right now, or also maybe our logic based on what some macro data is saying. This is usually like the best way for us to specifically invest in uncertain times like right now. All right, so without further ado, let's continue. So what we have seen is like a little bit of a contribution or distribution zone. So for Bitcoin, around the 82,000 level. Now, despite like the sudden reemergence of like macro headwinds, including renewed global tariff pressures, localized geopolitical strikes, and isolated viral outbreak reports, we might have a new corona around the corner. The portfolio maintained its 70-30 allocation. And again, this was mainly due to like navigating the risk. And the thing is, Jack and I, we both run multiple systems at once, and most of our systems are actually starting to get quite bullish right now. So it is hard for us to not like listen to our systems and increase our risk accordingly, which is actually why we decided to aggressively rotate back into the market. And yeah, it was quite a good decision, let's put it like that. So we started to get back into the market, first into HYPE, which actually wasn't like the best trade or best hold for a very short period. So there we entered, I don't have the exact numbers in front of me, but we entered with quite a big chunk of our portfolio, wrote it down a bit, and then directly got out again, because another coin that I currently can't expose was starting to look quite interesting. So we freed up some capital, or the capital that we freed up by getting out of HYPE went into another altcoin, and then also we reduced our Bitcoin allocation to 30% or 130%, and also this position went into another altcoin, so, or major in this case. So we are still like heavily allocated in the lower risk end of crypto, not Bitcoin, but lower risk in terms of like the top majors. Like we are not trying to play it like ultra risky. We are not going into like any altcoins that have a market cap, like let's say a market cap below the top 20. So we are still allocated in the majors in terms of top 20 cryptocurrencies. And yeah, this is like mostly the things that we have done. Usually, like the times right now, like I can just say, like it looks quite bullish no matter at which cryptocurrency we look. For example, HYPE has been in a pretty decent uptrend, I have to say, since mid-end January. And for Bitcoin, it's also the same. Like I think people right now, they fade this pump quite a lot because they think they know better based on the little information they have around macro. Obviously, yes, the situation is bad, but it's always like difficult to make assumptions based on the things you think you know. Obviously, yes, there is an energy crisis, or there's a potential energy crisis on the horizon, but are you sitting in the same room where the decisions are being made? Do you know what is going to happen when Trump is going to meet when the US and China are going to meet and discuss tariffs? Like there's so much stuff that is currently unknown to us or to normal investors, that making assumptions based on specifically macro data is extremely hard. There are so many different things influencing the markets right now. And not just right now, like always, but right now it's like even harder to understand like what is actually going on. And then like thinking that you know better is extremely difficult. So just following a system right now, in my opinion, is like the only way to like successfully invest into whatever asset class. It doesn't matter if it's crypto or the stock market, because also for the stock market, like, I mean, we made like all-time highs just recently on the normal, not this one, on the normal S&P 500. So most people were quite surprised by this crazy run, but like if you didn't invest, like you lost money by not being invested. And if you don't have a system that tells you to get into the market, you completely missed that run. And held stable US dollars, and through that had opportunity costs. And this is definitely nothing that you want to have. Obviously, you can sit out some of the pumps, but it's important that you don't sit out the major ones that lead to the biggest growth of your portfolio. So let's quickly walk over a bit of the things that have happened the last week specifically. So first of all, one thing that I want to point out, which is just like a major sign for the growth of crypto, not just in the speculative sections of it, but also in the like real world asset space, and also like things that actually like improve financial markets. Tokenized US treasuries are currently hitting all-time highs on the on-chain. So a lot of people, or a lot of like providers start to use blockchain to like distribute US or offer US treasuries. I think also that for the US in general, this is a really like interesting market simply because so much liquidity is like prisoned on chain, and a lot of that usually goes to stable coins and bear markets. And having US treasuries on chain, specifically throughout times where you have a lot of uncertainty, is definitely something that where I can see a lot of value for the US, because there's a lot of capital from all over the world waiting to be allocated to like safe haven assets throughout times or periods of like big uncertainty. So I think this is also one of the reasons why we see such a growth, specifically in the RWA sector, a sector that I have been bullish on for a long time already. For the people who know me, they know that I've been talking about this sector, I think, in the first DeFi era, like when you had like the first RWA projects launching like some futures for commodities and stuff like this. So or real world asset, like real estate projects that try to tokenize like real estate and stuff like this. So it's a very interesting sector and it's growing a lot. And I feel like this is just like the beginning of everything that is going to happen. And seeing it hit all-time highs in terms of distributed value is just like the beginning, in my opinion. So definitely a sector that you should keep an eye on if you are not doing that already. Now, let's quickly walk above the things that happened last week. So previous week. So first of all, we had the RXM coming out with like not beating the expectations, was a bit below it, still above 50. Job openings also not necessarily like positive surprises, rather smaller surprises, like rather surprises to the downside. In general, the employment data that came out was not necessarily good. So also the sentiment index, like this is what I've been referring to in the beginning, like people are extremely bearish, and you also see that in the data directly. And also core inflation rate, this was actually coming out today, was a bit higher than expected. So overall, I actually haven't checked it out yet, so this is something that we can do real quick together, what actually drove the inflation rate. Yeah, as expected, like oil, energy, costs jumped by 17.9%, and also I heard that rent, yeah, exactly. So shelter and food also went up, which was also to be expected. Not just because of the war in the Middle East, also because of the things that were going on in Venezuela. So previously, so I think a lot of things take effect right now, and it is nothing that is surprising to me. Obviously, like when Walsh is coming into office, I can see that the inflation rate is going to get corrected to the downside, because the way how he wants to measure inflation rate is going to be interesting. It's going to be different. Obviously, it's not going to introduce this new framework directly in the beginning. If you don't know what I'm talking about, doesn't matter. It's not that important. So yeah, let's quickly go over why I say that the unemployment rate is not looking good, or the employment rate is not looking too good in terms of, yeah, for the people, actually, not for the economy. For the economy, it's actually kind of good. So first of all, the headline unemployment rate stayed the same at 4.3%, if I'm not mistaken. Let me check that out. Perfect, everything. Yeah, 4.3%, didn't really change. But one thing that we, like, what is not being measured, like, first of all, you have to understand how the unemployment, what counts in the unemployment rate. Those are people who are actively searching for a job but don't have a job yet. And U6 is basically also looking at people who gave up on looking for a job, for example, or started to work part-time. And we see a sharp rise in U6. So this is a sign that the unemployment rate is rising. Simply like not the headline unemployment rate is not rising. This is like one thing that you have to keep an eye on. And another thing that I was looking at is the so-called VU ratio, job offerings per searching unemployed US citizen. And this is a very, very interesting metric because this is a pretty, or especially like the 6-month delta, so the six-month change is a pretty good forecast for what is going to happen, because like the name alone already gives you like a pretty decent clue. A job offerings per searching unemployed citizen is a metric that the Fed is actually looking at, and once this falls below falls below 1, this was usually like a pretty interesting sign that the job market is cooling. So when you have a very high level, like for example in 2022, this means you have a very like aggressive job market, or that the job market is in a very like people find jobs easily, or like companies have a lot of job offerings, and this is usually a sign that the economy is overheated and people are job hopping and stuff like this. So if you think back to this period, I feel like a lot of people didn't have like, it wasn't too hard to find jobs throughout this period, especially in certain areas. Now, on the other hand, on the flip side, like when we look at 2020, like especially like the start of Corona, everything below 0.7 is like a sign that or below 1, let's put it like that the job market is cooling, meaning that there are less jobs than people are looking for jobs. And this is usually a sign for the Fed that they have to start like helping the economy again, because they try to like help people, or they are basically in the position to decide or to help companies increase their job offerings. Okay, so this was really complicated explained. It's just like the Fed has the opportunity to turn the ship around. So and once the VU ratio falls below 1, this is usually a pretty decent sign for you that that we could see that the Fed starts to low interest rates again. And when we look at let me quickly open that up. When we look at when we also chart the US interest rates, let me quickly get rid of everything else. So when we also look at the federal, holy moly, let me quickly do that. So when we look at the interest rates, we can also see that throughout periods or like especially after periods, or like right before actually, before we had like those crazy dumps, that they also started to fall. Now we have seen a fall in the interest rates already, but I believe this is going to continue, especially with Walsh as the new Fed chair. I feel like that there's going to be a lot of liquidity being unlocked by lowering interest rates. Now, another sign for that is I've tested, I've backtested the VUA ratio, especially the delta, quite a lot over the past couple of days. And what you usually see is after the 6-month delta starts to go down. And for me personally, one very simple way to do that is just having the rate of change set it to 6 for this chart. Once this delta starts to be negative, then we can, or the chances are really high that we see an increase in risk assets, or that risk assets will continue or are going to climb over the next couple of months. So there was, I think, the average gain for the S&P 500 was 15 point something %. So in my opinion, all of that points in the same direction, which is that we are in for a little bit of fun for risk assets. Even if nobody sees that right now I might be alone with that opinion, but our performance looks good. We have outperformed USD, and also overall, like I'm quite happy with our performance. I think it's a very, very difficult time right now to be invested in the market and don't have a system. So I can highly recommend everyone who's watching this and who don't have a clear system that heat backtested to like start doing that, because I think it will not get easier. Like this is another thing that I see happening. Like you have pumps that you are simply not able to catch when you don't have a system that tells you to buy like around this level right here, because the momentum turned bullish, for example. So it is a period where like everyone who has no system will definitely underperform, and this is like quite normal. And I feel like with everything that is going on, I think it will just get more difficult to navigate the markets without a system. And I still read the news every single morning. I still listen to the Financial Times market update, to the Bloomberg market update, and like everything that I hear there is just like, it's so confusing. So much stuff is going on. We have like, just one example, like you would expect like things to look quite bad when we look at, for example, the earnings last week, which was also a major event. Like a lot of earnings, I think 20% of the market cap of the S&P 500 reported earnings last week, and most of them turned out to be positive surprises. So we had Palantir with a positive surprise. This was kind of obvious. Shopify with a positive surprise, which in my opinion is also something which you not necessarily expect to happen. We had, let me quickly check that, which one was it? Yeah, we had AMD. Okay, yeah, they were also kinder expected. Like it's not something where if I tell you AMD had a positive surprise to the upside, you wouldn't say, okay, yeah, it's completely unexpected. So AMD with a positive surprise. We had Disney with a positive surprise to the upside, Uber, and so on and so forth. Like a lot of like McDonald's as well. So a lot of companies are still doing pretty well for those like bad economic for this bad economic situation, and even with the tariffs and everything that is going on. So I feel like a lot of people are overly bearish, and out of experience I know that most of them will enter late, especially when you come out of like such negative times. So I can highly recommend everyone who's watching this just to sit down, think about like their way or their system that tells them to buy, when to buy. I wouldn't make it too complex. I would keep it rather simple. Don't look at too much of the macro data, because like if you are not a macro expert, like even if you are a macro expert, like I think right now understanding or making sense of everything that is going on, like you can easily fall into like this analysis paralysis. Like it's easy to look at too much data and just do nothing, and through that like miss most of the pump. So like I feel like this is something that is a risk that you have to keep in mind, like entering way too late and falling victim to like FOMO. So again, like just zooming out a bit, we are in an uptrend, I would say since here, which is already like since 44 days, we are on an uptrend for Bitcoin. And if you didn't invest in Bitcoin, or like also like, let's say you invested into something really, really boring like the S&P 500, and it wasn't boring over the past couple of days. So again, like also over the past like 43 days, the S&P 500 was looking kind of good. So everyone who like stayed on the sidelines missed out on a lot of profits or potential profits. So with that being said, don't get too confused by all the things that are going on, especially if you're new or if you're not experienced. Like turn off the news, because they are not necessarily going to help you. I'm actually going to release a lot of videos now on YouTube that will help you. And also I am going to publish my first book. So this is going to come out also throughout, like with the next video actually. So yeah, I would definitely look out for that, because this will help you to build a system. Very easy one. It's not going to be too complicated. I try to keep it fairly simple. And yeah, with that being said, I see you in the next market update. I will do this weekly now. At least I will try to do it weekly. And yeah, with that being said, I wish you all beautiful. It is Tuesday now, and see you in the next video. Cheers.